Doc and Eric Dubin with the SD Weekly Metals and Markets Wrap. Well, after last week's FOMC, Eric, this is the week they chose to hit the metals again. But while sentiment is pretty terrible, it's somewhat encouraging that it seems that the cartel has, well, I wouldn't necessarily call it a failure. They haven't been too successful to get any downside follow-through. They tried again during London trading here on Friday morning. Silver was smashed all the way just about to 1550. Gold was knocked down right around to 1170. And then actually after the COMEX open, gold is knocked under 1170. But gold rallied nicely throughout the afternoon here. And silver also recovered pretty much all of those overnight flash crash losses and is closing the day around 1580. So what's your takes here on the markets? I know we were talking about Bull Polney might end up being right, but he's running out of time for June. But what's your take for July in the markets here?
I can't resist that softball pitch. Bo's definitely going to be wrong on June, obviously, and his big picture calls about gold 2000 within this year, et cetera, et cetera. I mean, I totally do not subscribe to his cycle theory work, and there's enough said on that. The funny thing is, though, in the very short term, I think we will see a big turnaround in silver, and we'll get to that in a moment. And that'll lead gold, and I wouldn't be surprised to see us in the not-too-distant future, can't exactly say when, but, within the next month or two, pretty easily slicing through that 1850 level, and then it's a question of whether or not the cartel will try hard to push things down once again when they've been able to rebalance the short position, particularly J.P. Morgan, and recharge their batteries, so to speak, metaphorically speaking, and then tack again with full force of what they can do as cartel forces with the Fed behind them in the Bank of International Settlements, etc. This June has been probably one of the most interesting months I've seen in this entire 15-year bull market cycle, particularly in silver. If you roll back pages of history to earlier this year, we'd have Bill Murphy on, we'd have Dave Morgan on, we'd talk about this huge open interest in silver, yet compared to gold, you didn't see that oversized open interest position. And again, we're talking about levels where we're in excess of the peaks that we saw in 2011 when silver just licked $50 an ounce. And normally you'd expect to see high open interest when you're in a raging bull market, and then people sometimes forget, but back then, 2011, we saw silver double. It was near around $20 and moved up to about 50 or so, and open interest just blew through the roof. Well, guess what, folks? We're
we're talking it passed 200,000 contracts for the first time ever this week.
Ever, in history, and this is in for the most part, a bear cycle. I've been arguing in October in real time that we were, turning the corner in that bear cycle, and in fact, that's true. We've seen higher lows in silver and gold. It doesn't feel that way, but this switch to a rebooting of the bull cycle is in fact underway. You just can't see it because most people aren't, looking that closely in the shorter-term charts and whatnot. But the bottom line is that this open interest in silver right now has been exploding. And there's only really at this stage one realistic explanation for what's going on, and it tells us a lot about the underlying condition of the market, and that's that J.P. Morgan primarily has been shorting the snot out of silver on the COMEX, trying to push it down and also in hopes of pushing gold down. And they also are accompanied by copycat speculators who understand this game. They don't talk about it in the media, obviously, and they certainly wouldn't be invited to be interviewed on CNBC anyway. And here we have this, mishmash of the most aggressive shorting over a duration period of time. We've seen particular cartel raids that happen in a 24-hour time frame that are, massive and are much bigger than what we've seen over the course of this month. But in the, over a duration attack of a month long with open interest skyrocketing in silver, folks, there has to be another side to every trade. There's another side to the trades that J.P. Morgan and company are putting on. And those traders are really deep-moneyed. They know what's going on in silver. They understand the fundamentals. They don't give a rat's butt about 1 month time frames. These guys are in here for a 1-year trade, and they recognize that the fundamentals are going to assert themselves because you can't have a 4.5-year long bear market in silver with us now more than a year under the cost of running mines. The cost of silver extraction these days on a net basis is probably about $23 an ounce, give or take. And mines are beginning to be furloughed and put on care and maintenance, and less investment has gone into the sector over the last 2 years, such that we're facing a real, genuine shortage coming down the pike in silver that cannot be resolved in any way other than to see much higher prices. And these traders that are going up against the most powerful monetary interests in the entire world know this. And there comes a point when those collective army of ants, I mean, right now it's not, mainstream, and it's not a large number of individual players, but nonetheless, we're still talking about the potential for a lot broader of a base of longs coming in to take on this low-hanging fruit. We have an unstable, manipulated market that at some point has to give, maybe not in a, COMEX force majeure kind of scenario. In fact, that's actually less likely, in my opinion, than just the managed retreat thesis operating on steroids, where the JP Morgans of the world just have to let silver rise because it's an untenable position, and to continue piling on shorts just makes it far, far more dangerous to them in terms of their book. But we're sitting here in June having seen a very significant number of very strange things happening in the market that offer us market intelligence, as I like to say. Earlier in the first part of the month, we saw that really amazing thing where the cartel came in the early AM hours and whacked silver down, but at the exact same time, gold went up. And this was also in the context of people fearing sovereign debt risk and probably some buying when it comes to people trying to hedge Greece. We saw an unusual divergence a couple of times where is likewise gold went sideways or down, and silver was actually outperforming. We've seen last week where the FOMC attack early in the week was successful in painting the tape, but absolutely nothing happened leading up to the announcement of the FOMC, which at the time I described, and I think I described on last week's show as well too, that was more in keeping with the way a traditional market and traders would react when they're just waiting for news and they just kind of sit on the sidelines and not do much. And the point being, the take-home point is that actually showed that the cartel wasn't trying to attack going in to the FOMC, and you have to wonder, well, maybe they didn't have quite as much of an interest in doing that because they've already been attacking like mad, as you can see in the ballooning short interest. And such that, that's another example of the cartel actually backing off a bit. We see these examples of the cartel backing off a bit, and that's the message I've been pounding since May 30th on our show. And even though we've been going down, and even though they were able to take out $16 and, even barely lick 15.50 last night with a bounce back now, yet again, this week has been characterized by behavior that you can just see. Watching open interest, watching the price action. It's not technical analysis. It's just basic looking at the markets and seeing what's going on. We had the FOMC last week, and then this week when it came to silver, July COMEX options settling yesterday on the 26th, Thursday. Even though the cartel was able to attack the market 2 days before, since when do they not attack on an option expiration day on a COMEX? Right. They attack
after they didn't attack on the FOMC statement the week before.
Yeah, I mean, I know that a lot of people are just completely exhausted, and that this bear market has just made sentiment horrible to the point where when someone like myself points out these things, we get ridiculed. We people look at this stuff and say, "Come on, guys, you're just launching propaganda." I mean, you're talking your book and whatnot, and the realities are that this is what the market is actually telling. That the cartel, even though they were able to bust 16, they weren't able to do it by much. And even look at today, as we speak, we're recording after the market closed on Friday, and gold is trending back up. And after the attack last night, silver's just going horizontal ever since about 12 p.m. Eastern Standard Time. And that speaks to kind of like a temporary ceasefire where the longs have been able to soak up the vast majority of what J.P. Morgan and company and their friends that are copycatting them threw at the market, and that's why we're going sideways now, because there's this kind of standoff for the last 4 hours or whatever. We've been in this period where it's just marking time. So we're after the July contract settlement, and we got to get through first notice day with the next month contract, and we always will have the FOMC report periods and the employment report periods where it becomes even more of an imperative for the cartel to come in and attack, and so those periods are going to see downside action. But the way I see it, what the market is telling me based on how it's moving and in the direct relationship to how this open interest is exploding, I think there's really only one conclusion that makes sense, that fits all of these pieces together, and that's that the cartel is attacking like mad, and in silver, unlike anything it has done ever before in a duration period longer than a couple of days, and that they are, in fact, having problems getting the market down. And, that's what the market is telling us. And some people won't believe that. Some people won't see it that way, and I guess we'll just agree to disagree, because that's what makes the market.
And we've seen physical demand explode once again with silver breaking under 16. It's really been quite something to see the retail demand explode really immediately once we saw a 15 handle in silver, and for the last 3.5 days of this week with it, just demand's been off the charts. We are seeing, I always say the first thing that we see is the 90%. Premiums are rising at 90%. It's getting hard to find, so we'll see how this plays out in the coming weeks. Again, for maybe new listeners, previous times when big shortages have developed at the retail level in physical silver particularly, the leading indicator has been 90% silver, which is no longer produced. It hasn't been in several decades. And as the supply is limited, it seems to be a leading indicator of shortages down the pipes. And premiums have risen quite a bit in 90% just in the last couple of days, and it's getting hard to find and hard to source. So we'll see whether that trickles down into some of the other mint products. We are not seeing delays right now in the Sunshine products or the U.S. Mint. They're no longer allocating, which is a good sign, but we'll see how long that lasts if silver remains under $16 an ounce.
For our international listeners and for people who are new to the market, when Doc says 90%, he's talking about the standard dimes, quarters, half dollars, dollars that were part of the United States currency and circulating and produced up until 1964, and for almost the entire history of the United States before that. So, let's shift gears here a bit and talk about probably one of the most important other stories that are going on. That's kind of on the back burner for this entire year is an ever-present story, and that's Greece. And it's kind of funny, too, because you almost can take grab a newspaper from last month and just start reading the headlines and points, and a lot of it would actually pertain to the exact same arguments and salvos that both sides are lobbing at each other right now. It's been this kind of never-ending tit for tat kind of thing, and the only major difference is that instead of negotiating positions flip-flopping every week, or maybe even a little like every other week, now we're at the point where we flip-flop every day and sometimes every hour. And in reflecting about what's going on in terms of the media coverage of the debate positions between the Troika and Greece, it occurred to me that there really hasn't been a lot of coverage with the main point that Greece is trying to argue, and that's they want a renegotiation of the debt such that some of it is written off. And I think part of the reason why this point isn't talked about as much as it should be is because, frankly, that position isn't something that the Western financial interests who buy all the advertising and sometimes outright own the media, Rupert Murdoch with Wall Street Journal and the Telegraph in UK as being a great example, they don't want to have all that stuff out there because they don't want that to percolate into the minds of the readers. So what's really interesting that has developed over the course of this week is that as we went into Monday, we had all of this high tensions and expectations that, okay, this coming Monday is going to be all and end all, final emergency negotiation that everyone's going to sit down at the table and put down new cards on the table. And some of that happened, but again, we saw that pattern once again where the main card that wasn't talked about in the media but was actually put on the table was not this Greek offer to raise the value-added tax. You know, they put that out there to try to, begin the discussions. What in reality was a reiteration of what they've been demanding all along, all this year, and to some extent even in the fourth quarter of last year, and that's the debt renegotiation position. And on the flip side, the Troika, primarily the German interests in Brussels and the European Union, are terrified of doing anything with respect to debt renegotiation because that will send a signal to Spain and Italy that they should actually ask for the same kind of deal. And that's part of the reason why it's not focused a lot in the media as well, too, because they don't want average people in Spain and Italy to be thinking about that kind of stuff. I mean, this is the stumbling block that basically has the Cyprus or the Greek government overall at this point putting forward the negotiating stance that you're basically trying to blackmail us, and that we're not going to budge on pensions unless we get at least some kind of debt restructuring. And the reality is that the debt that Greece took on, to get into the euro in the first place, the reality is that the debt that was taken on when Greece became a member of the euro was debt that should not have been taken on in the first place because it already from the get-go had put Greece in a position that violated the Maastricht Treaty in the first place. But Goldman Sachs helped Greece hide that by keeping things off balance sheet and lots of other tricks that they did. And ever since that very original sin, we've been living with, Greece going through a period that essentially brought them to default. And yes, of course, their, pension system is, on the order of a first world type of pension system that most people around the world would dream about, with people retiring at 55 or 52 and having amazing benefits and all that. I mean, some of these arguments about the quote-unquote pigs nations excesses have some truth to it, but the bankers' sins are far greater. They created this mess. They've created a debt level that cannot be repaid. It has to go through some kind of restructuring. There is no other alternative. The bankers know this. They're afraid of that reality because of what it means for Spain and Italy, and they're not willing to do what is necessary to keep Greece stable and in the Eurozone, because without any kind of backpedaling on the debt and some kind of restructuring, there is no solution. That's really the bottom line. And you can't fix a debt crisis by adding more debt. And so what we talked about on the show last week, I believe, is exactly what's going to happen. Around the edges and timing and whatnot can be a little tricky, but I think going through this coming week, that we're supposed to see this Saturday emergency meeting, although like what we were supposed to see fix things last Monday. I mean, it's the same thing over and over and over again. And I believe that Greece is going to formally declare, or that they will see themselves being declared as being in technical default, and that we'll have parallel currencies, capital controls, maybe a bank holiday, and then it's going to evolve over a period of time of many, many months. It's not going to be like what some of the analysts and pundits in the gold community are saying, that, oh my God, everything's going to crash in one day or 48 hours. It's not the way this is going to roll. It's going to be an evolutionary process. And you can even look at the 2008 crash and the maiden capital Bear Stearns funds that blew up with Alt-A investments back in 2007. It took a whole year for that to unfold, and to the point where, in 2008, the Federal Reserve and the Treasury were declaring that they're going to backstop all of the debt in Fannie Mae and Freddie Mac. I mean, these things take time. It's a battleship kind of thing, and it takes a while for the battleship to be turned 180 degrees. So all this said, I think that everything that we talked about on the show last week is going to play out in the July, August time frame, and it'll eventually unfold to the point where you're going to have Brexit as early as 2016 first quarter. All this is incredibly bullish for gold and silver. It dovetails with what we talked about with the silver shortage earlier in the show, and all these fundamental forces are synergistic in nature. They're going to leverage off of each other. They're going to be resulting in a whole that's greater than the sum of the parts is going to result in a whole that is much greater than the individual components of fundamentals that are arguing for higher prices. And when it comes to precious metals, the insurance importance of being outside the banking system has never been more important. So, I don't know. These are just crazy times, and then you add on top of that the excesses of corporate rule over general countries that are having this veneer of sovereignty and all of our rights being chipped away and so forth. And then geopolitically, we're ratcheting up tensions and having the possibility of conflict with Russia in the Ukraine theater, and I fear that there may in fact be a pretty decent probability for a black swan taking place in the form of ISIS attacking Saudi Arabian oil fields, or just a generic terrorist attack in Saudi Arabia overall. I mean, we've already had 3 terrorist attacks in Saudi Arabia that barely have been reported. The one back in, I believe it was October of last year, I know it was the fourth quarter, there were only 2 media companies in the entire Western Hemisphere that covered that attack. There were only like 5 people killed, but nonetheless, it's still significant that a terrorist attack happened in Saudi Arabia. I mean, if ISIS was able to kill 5 people in the United States, we would be hearing 24/7 news coverage for 2 weeks. The only 2 companies, media operations that covered it in the United States was the News Doctors and the Wall Street Journal. So all these things are happening. We have a hugely unstable situation with our financial markets. A bond market bubble is bigger than anything in human history. And it just is, it's like we're living in this alternative universe matrix reality that's painted for us by our media. And most people buy it. Most people in the West have no idea how unstable things are. And it won't take much for things to start devolving. It probably won't be a total crash that takes everything down and is something that happens in a span of just a week. And like I said, it's going to probably be more of a scenario of slow at first, like a slow burn, a la Catherine Austin Fitts, as she describes it, and as we have been in. But at some point, it'll probably accelerate as well, too, and the end game will be ugly. And I think that end game is not September, October, as most people expect, but it's next year.
The corporate interests, I think, Eric, we'd be remiss if we didn't discuss this week's developments with the TPP and the Fasttrack. And it just seems interesting to me that all of the media here in the U.S. is distracting everyone with Kabuki theater over this shooting in South Carolina and drumming up racial tensions, and it seems to be all anyone cares about is the Confederate flag, and meanwhile they're quietly fast-tracking TPP.
Yeah. I mean, it's always the magician's trick. Don't pay attention to what's going on with my left hand. You got to look over here in the right hand, and the left hand's beginning to do things that just screw us over. It's funny. I watched a really wonderful mini documentary-style newscast by Melissa Dykes of TruthStream Media, and those folks are just doing some of the most innovative videocast, internet-based news coverage anywhere. I mean, it's funny. It's like the classic Saturday Night Live news skits that they did in the 70s. I'm not talking about the stuff they do now, and not even things like Jon Stewart does. I mean, back in the day of the 1970s, the Saturday Night Live, that stuff was really innovative, and now on the internet, people like Melissa Dykes are producing stuff that you just have to check out. I'll put a link on their most recent show, but for the first 15 minutes, she rattled off examples of this, don't look at the left hand, look at the right hand kind of scenario with all of these shootings that come exactly when there's big policy shifts that the powers that be basically find it in their best interest to not have people focusing on, all these false flag kind of style events, and this latest shooting is a perfect example because the main vote to approve Fast-Track Trade Authority, which they renamed to Trade Promotion Authority to try to hide what the actual meaning of it is. I mean, back in the day when they introduced NAFTA, they had, right out in the open, Fast-Track Trade Authority being argued in in the halls of Congress, and nobody cared about it because no one recognized how bad these deals were. Well, not as many people, I should say, better said, understood the problems of these deals. But nowadays, it's like, renaming something as odious as the Patriot Act in the hopes that people don't understand what the legislation means. Here they are saying, okay, Trade Protection Authority. Well, everybody needs to protect trade, right? I mean, that's a good thing. But the Trade Protection Authority enables the president and the executive branch to negotiate a trade deal where it is put before the Congress for the final vote, where the Senate is supposed to ratify. It's an up and down vote. There's no ability to add any amendments. There's no ability to review the content of the final negotiation that's going to be taking place in the weeks and months ahead. And the senators are hamstrung because the corporate interests are pushing them on one side, and then they have to go to their constituents and say, well, I didn't want to vote against trade promotion. That's in the interest of the United States, right? I mean, the average commoner, right? Reality is that Trans-Pacific Partnership Trade Agreement has 29 chapters, and only 5 of them deal with traditional reduction of quotas and tariffs. The vast majority of this, with chapters on intellectual property that make it, extremely onerous to the point of silver doctors and the news doctors possibly being attacked by the powers that be, because if we use one picture that isn't declared 100% in free, open, Creative Commons license or something like that, or we don't have a specific license for something, they can come and shut down the operations. People don't understand that it's not just about the protection of or the promotion of lower barriers to trade, but the vast majority of what the Trans-Pacific Partnership has within its bowels is designed specifically as corporate welfare to advance the interests of multinational corporations at the expense of normal capitalism. It's not about furthering competition. It's not about furthering trade. It's about concentration of power of corporate interests at the top that can even usurp the sovereignty of the United States and other participating nations. People talk about the New World Order and one world government, and to a large extent, folks, the whole focus on New World Order and one world government is a foil. It's a way in which people can be distracted against what, in fact, are the more powerful and more easy to implement means by which the oligarchies can concentrate power in their hands. And the Trans-Pacific Partnership and a similar deal with what's going on between Europe and the United States are examples of that. Get these deals in, it concentrates power at the top. You don't need no ridiculous government in the United Nations to be pulling the strings, because these deals set up usurping of sovereignty in the interest and service of multinational corporations. This is where the main problems are, and I get a little bit sad, to be perfectly blunt, that a lot of people in the research community go off on tangents and cul-de-sacs, and they don't see what is represented in these particular tools that the oligarchy use to set up their control over the world. It's not a one world government, it's a one world alliance. Anyway, the Fasttrack Trade Promotion Authority has basically made it such that it's most likely that the TPP is going to pass. The only possible exception to that trajectory is if a lot of people in the United States get very vocal beyond what they already have, and that people in the Senate get a little nervous about the prospects of them not being able to get reelected and have their corporate backers with their money overcome the angry populace. We have seen periods where the population has, in fact, pushed back and made an influence on our so-called representatives such that they actually represent our interests. There have been periods like the Syria war that could have been, and other things that have happened where, the American people's voice still actually was able to do something. It's not, we haven't lost everything yet. And the parting shot I would say to people is get politically active. You don't have to do everything. You don't have to, be completely bonkers like someone like myself that spends more than 12 hours a day on these kind of things. Just do something. Do a little. talk to one or two people a week about what's going on. Try to wake people up, because, if we don't do that, we're just going to be flushed down the toilet.
And on that note, we'll wrap up the show this week. All right. Yeah, get active. Couldn't agree more. Rounding everything out here. Looking for some interesting developments in July, both in Greece as well as the gold and silver markets. So should be an interesting summer and a hot one.
A hot one. More ways than one.
All right. So we'll wrap up this week's show here. For Eric Dubin and the Doc, thanks for tuning in to this week's SD Weekly Metals and Markets.